And so the roller coaster ride of the buy and hold puts a lot of strain on individuals. Now, if we take a look at the diversification side, this is where we really stand out and add a lot of value. So we were long the bond market, which is TLT, this bottom chart. And this was back in our last trigger. And if we take a look, we got out of the bond market. We moved into stocks because the strategy, the markets was saying, hey, get into the equities market. We hit our first target at 3%, second target at 10%. The trend changed about a month ago, and we closed the rest out at a 6.5%. Now, somebody who has stocks in bonds, if you still held bonds, you were down 12.5%. And this is where we really stand out, is knowing which asset class to move into and when to step aside into something boring like the dollar or just a cash position. If you take a look at this middle chart here, this is the 60-40 portfolio. Over the same time, you are down 3.5% simply because your winners are crushed and all the gains are taken away by your losers. Diversification means you're going to have winners and you're going to have losers, and then you get this really low average return. And so this is what we're allowed to avoid, is having this diversification and this underperformance of a strategy. When you hold stocks that you love, you have this thin blue line roller coaster ride. Huge returns, you feel like a superhero, then you give it all back and you're all over the place, versus something like what we do, which is super slow, really boring, and it's like watching paint dry, and we're just slowly rotating, compounding our growth on small trades, 1-2 base hits, time after time, just slowly adding this growth and the stability. That is what we focus. I know some of you want to look at the comparison of how we compare to the NASDAQ. Obviously, this top blue line is our ACS strategy. This gray line is the NASDAQ from the 2008 market top. You can see here we have we're matching its performance more or less. And if you just compare it, this is what some people for some reason don't pick up on or understand: maximum drawdowns. The difference is the NASDAQ is up 800+%. So is our strategy. And we do it in a very low volatility way, which you can see right here. The max loss, the max volatility that the account had to go through for the NASDAQ was 50%. And we are less than 6% since the 2008 market top. That is going through multiple bear markets already. It's going through the flash crash in May. That is going through the 2022 bear market. It's going through COVID crash. So it shows the stability, the protection that we have. And this is the real value, is being able to get into things and know we're not going to lose our shirts. It doesn't matter what happens in the economy, what news or the Fed does, all of that stuff. So that's kind of where the real value comes. And